Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the tariff war mess is getting messier. But first up, the overnight dairy auction came in a bit better than the futures market suggested it might. This event offered lower volumes at the back end of the current dairy season, and prices eased just 0.5% in US dollar terms from the last full event, but were up 1% in New Zealand dollar terms. Whole milk powder eased 2.2%, and that was as expected, but butter and the cheeses made better gains than expected. Buying out of China was modest, but there was raised interest from both Europe and the Middle East. In the circumstances, this was a solid overall result. Most other commodity prices are taking sizable hits from the now daily tariff war battles. Behind all this is the expectation of falling demand as the US economy makes a sudden detour into recession. China's retaliation on US agricultural exports have seen sharper falls in wheat and soybean prices. And the impact of the trade war hasn't hit US retail sales yet, unless you think American consumers are stocking up ahead of the inflationary effects. They were up 6.6% from the same week a year ago, but they are showing up in sentiment surveys. Today's release was from the Real Clear Markets TIPP Economic Optimism Index, and that retreated notably. This index rose in November, but has essentially retreated since and is now net negative and a 5-month low. The American need for more warehousing and higher inventories is driving their logistics industry to a 3-year high. The components that weigh on productivity are getting the gains, though. And the US is using a fentanyl crisis, one actually in retreat and driven by American demand, as an excuse to impose increased tariffs. That alone will be inflationary. The countermeasure responses by Canada, Mexico, and now China will distort large parts of the American economy and have global resonances. The US tariffs are expected to raise the cost of American car makers by more than $60 billion and will drive most into losses and may even kill some, like Stellantis. Car demand is expected to fall 12% in the US as a result of the needed higher prices. Financial markets continue to react in a negative way. They've given up any post-election gains and more. Things could get much worse, and soon. Congress is nowhere near to agreeing a budget funding deal. Across the Pacific, Japanese consumer sentiment is falling back too now, and is back to where it was 2 years ago. On the Australian east coast, Cyclone Alfred is barrelling towards Brisbane and northern New South Wales. It is expected to make landfall as a Category 2 storm late on Thursday or early Friday, and will be the first tropical cyclone to hit New South Wales since Nancy in 1990. Today, the US Treasury 10-year yield is at 4.19% and down 4 basis points from yesterday. The price of gold will start today at just under $2,912 an ounce, up $20 from yesterday. But oil prices are down $2 at $69.50 a barrel in the US, while international Brent price is just on $70.50 a barrel. Lower expected demand is why this price is soft. And the Kiwi dollar is now at 56.2 US cents and down 10 basis points from yesterday. Against the Aussie, we're up 30 basis points at 90.5 Australian cents. Against the euro, down another 30 basis points at 53.3 euro cents. That all means our trade-weighted index starts today at just over 66.1 and down 10 basis points from yesterday. And the Bitcoin price starts today at $82,930 and down a net 7.9% from yesterday. Volatility over the past 24 hours has been extreme at plus or minus 5.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.